Okay. So Unit Trust of India is a public sector undertaking which is owned by central government, and we'll slowly see how it has been formed and things like that. Unit Trust of India was established on 1st February 1964 under the Unit Trust of India Act 1963 by the Government of India, which clearly states that it is a statutory public sector unit. Statutory public sector unit is that whichever entity has been covered by an act of parliament. So similarly, we have a State Bank of India, which is covered by an act of parliament of 1955. Similarly, Unit Trust of India is also covered by an act of parliament in 1963. And you know, act of parliament means that both the upper and lower houses of the parliament will have to approve the statutory norm for establishing an act and send it to the president for recommendation. So in 1964, on 1st of February, the central government formed Unit Trust of India. And what was Unit Trust of India? It was formed with two objectives, which are still the core objectives of Unit Trust of India: to promote and pool the savings from small investors, middle and lower income groups. They were particularly targeted to create savings in Unit Trust of India and pool those savings. Pool those savings for what purpose? To give them an opportunity to share the benefits. To give them the opportunity to share the benefits of what? This pooled savings were invested in the industrial development of the country. 1964 was one era after 17 years of independence. India started releasing some of the core sectors to private hands. When I say India started releasing some of the core sectors, it means after independence, immediately India sealed the industrial sectors, core sectors and primary sectors like production, steel, iron, all these things which are directly correlated to the development of the country in the central hands, which means nobody can invest in these sectors, only central government entities and central government can do business in these areas. But by 1964, when the government saw that some of the industries are flourishing now, government started giving licenses to private players to some of the new core areas. So government wanted flow of income, flow of revenue, flow of investment from small investors in India as well. Why do you think that small investors were important for the government? In 1964 onwards, maybe not in 1964, but I would say 1964 onwards, why did government have a vision to bring small investors into the picture? आप में से कोई बता सकता है मुझे कि क्या रीजन रहा होगा कि स्मॉल इन्वेस्टर्स पे इतना फोकस किया गया? कोई बता सकता है?
सर, एक्सपेंशन करना स्मॉल बिजनेस के साथ थोड़ा इजी होता है.
बिजनेस नहीं, बिजनेस नहीं. मैं कह रहा हूं जो स्मॉल सेविंग्स हैं उनको इन्वेस्टमेंट में कन्वर्ट करना. स्मॉल इन्वेस्टर्स का मतलब ये है जो मिडिल और लोअर इनकम ग्रुप्स होते हैं इस कंट्री में, जो मैक्सिमम है पॉपुलेशन का 60% 70% जो लोग हैं वो स्मॉल इनकम ग्रुप से आते हैं, मिडिल और लोअर इनकम ग्रुप से. उन लोगों की इन्वेस्टमेंट को, उन लोगों की सेविंग्स को इस्तेमाल करना कंट्री के इंडस्ट्रियल डेवलपमेंट के लिए क्यों जरूरी हुआ, ये बता सकते हैं?
क्योंकि मेजर पॉपुलेशन उनकी है और आई थिंक कि वही सबसे ज्यादा इनकम जनरेट करते हैं एज एन ग्रुप वाइज देखा जाए तो.
एब्सोल्युटली. सबसे इंपॉर्टेंट फैक्टर जो आपने मेंशन किया इज दैट देयर पॉपुलेशन. India as a country is a demographically strong populated country, right? It has a strong demographic features even today, right? Currently, India's population, which is earning, is more than 45%. More than 45% of India's population is earning. More than 65% people are in earning category of between 18 years and 60 years, right? So, इस वक्त भी small savings are very, very important. Why? भले ही एक आदमी 1000 रुपए बचा रहा हो, 500 रुपए बचा रहा हो, और वो किसी म्यूचुअल फंड में, किसी फिक्स्ड डिपॉजिट में, किसी गवर्नमेंट बॉन्ड में या किसी और तरीके की माइक्रो फाइनेंसिंग कंपनी के अंदर पैसे डाल करके सेव कर रहा है, तो वो नेशन के डेवलपमेंट की मेन स्ट्रीम में वो पैसा आ रहा है. आप सोचिए ऐसे 100 1000 500 निकाल करके गवर्नमेंट कितना पैसे का इस्तेमाल कर सकती है नेशनल डेवलपमेंट के लिए. Why do that is the purpose of having institutions like banks, financial institutions like UTI, right? तो ये था कि इनका पैसे का इस्तेमाल फाइनेंशियल डेवलपमेंट के लिए, फाइनेंशियल रिकंस्ट्रक्शन के लिए, इंडस्ट्रियल डेवलपमेंट के लिए यूज किया जाए, so that they may also get some part of the industrial development. So if the industries are flourishing, right? The industry was fledgling at one point in time by 1980. So by that time, people started getting returns. So UTI at one point in time was a very strong institution, जिसके through आप shares में invest कर सकते, and people really got very heavy returns. So this was the purpose, to utilize the 60 to 70% population of the country, and obviously there was a purpose of creating a habit of savings, and plus invest those savings somewhere so that you get good returns. So that was UTI, because bank was having a different purpose altogether. Bank was established only with the purpose of creating the habit of savings, and then obviously wherever the need is there, you can provide loans. But at that point of time, loans were given to a very few people in this country. There was hardly 3 to 4% population of the country which was getting loans. So majorly banks were opened for the purpose of deposits, right? So this UTI was established with this purpose. And why UTI was a different kind of financial institution? It was not a bank. UTI was established with an initial capital outlay of 5 crores contributed by Reserve Bank of India, Life Insurance Corporation of India, State Bank of India, and the subsidiaries of State Bank of India, and scheduled banks and financial institutions. This tells us very clearly that UTI is basically covered through its capital by RBI, LIC, SBI, SBI subsidiaries. Now everything is SBI, so we do not call it subsidiaries, and scheduled banks and financial institutions. But maximum coverage for UTI's capital was provided by RBI, LIC, and SBI. So we can say that these are the 3 public sector entities which own Unit Trust of India, right? At that point in time, when it was established with rupees 5 crores in 1964. What were and what are the primary functions of Unit Trust of India? Encourage savings of lower and middle income groups, sell units to investors in different parts of the country. As I said, everybody knows that if you are aware, आप लोग insurance पढ़ चुके हैं. Life insurance is sold in 2 different parts. One is a traditional conventional policy, and the second is non-traditional unconventional policy. Traditional conventional policy is that you invest some amount, maybe one time or maybe for 15-20 years, and then at the end of the tenure, the policy gets matured, or at the end of the life of the person, the policy gets matured and you get some lump sum amount. That is conventional method, which is not risky at all. The second portion is unit linked insurance policy, which is called ULIP, non-conventional. So what do? The entire fund of yours, आपने मान लीजिए 1 लाख रुपए लगाए, they will convert the entire 1 lakh rupees into different units. एक unit का एक price होगा, just like shares, and then they sell these units to investors, right? Similarly, Unit Trust of India, उसका नाम ही Unit Trust of India था. They started selling units to the investors and telling investors that, you know, this is we have 100 units and each unit is priced at 10 rupees, right? So it is 1,000 rupees now. So buy these 1,000 rupees, give us 1,000 rupees, buy these 100 units, and at the end of the year, or maybe after 2 years or 5 years, we will see what is the price of this unit. Exactly like a share price market, but with less risk. The important thing was that there was less risk in this business. So they started doing this in 1964, and this was very, very popular by the time 1990s, or other the time of 1980s, 90s, and 2000 came. It became very popular to convert the small savings into industrial finance. Through selling of these units, they used to earn money. That money was given to industrial corporations for financing, investment, to provide liquidity to the units. Obviously, each unit is priced. Whenever the person is not happy, whenever he needs money, he can return those units to Unit Trust of India and get whatever the current price of that unit is. However, say for example, the unit was purchased at 10 rupees, the example that I gave, but when he tried to, give this units back, probably the unit price was 9 rupees 50 paise. So he lost 50 rupees. This is one broad example. Another instance can be that when he wanted his money back after 5 years, he said that give my money back, I'm returning units to you. By that time, the unit price went up to 100 rupees. So for investing 1,000 rupees, he ultimately got 10,000 rupees after 5 years. What exactly like the shareholding and debenture holding kind of working. To provide merchant banking and investment advisory service. Also, it was very, very important along with the creation and selling of units. UTI also had advisors. They had a financial and investment advisory function to tell people whether to invest or not, how much to invest or not, right? What are the good units where you can invest, which are going to X type of companies or X type of industries. These kind of industries would continue to generate revenue. These kind of countries would continue to fledge in the market. And then, your units will also fledge and you will get good prices for those units. That kind of an advice is also given by the Unit Trust of India to formulate unit schemes or insurance plans. These are the two more things that he used to do. Along with creation of units and all, they also advised people on unit schemes and insurance plans. So let's have a look at the unit schemes that they rolled out. Unit Scheme 1964, Unit Linked Insurance Plan 1971, Children Gift Growth Fund Unit Scheme 1986. This lasted for 20 years. Rajya Lakshmi Unit Scheme. This was again associated with girl child. Started in 1992, lasted till 2010. Senior Citizens Unit Plan. This is for their retirement funding that started in 1993, with a focus that there will be more people by the end of 2010 who will be having 60 years of age, who will be near their retirement. And because by 1991, we already had the liberalization, globalization, privatization plan. So a number of private companies were expected to invest in India, create employment and create more job opportunities. So these kind of schemes helped people to buy senior citizens unit plans, and maybe they will be sold off by the year 2022-23 when 30 years of this unit plan will be completed. Monthly income unit scheme. This is one more income scheme when a person is getting retired, or maybe a person has a full-fledged fund of 10 lakhs, 20 lakhs, 30 lakhs. He can invest into this, and every month he starts getting certain amount of income. And that is based on the unit price. Master Equity Plan 1995, investing in equity shares of a company. They used to float unit equity. Money market mutual funds. So mutual funds started forming up after 1995. So this was one of the first mutual funds. UTI Growth Sector Fund. This was another mutual fund. And Unit Linked Insurance Plan. This is the ULIP that I was talking about, non-conventional insurance plans that were rolled out by Unit Trust of India. So these are some schemes, and these are the unit documents. This is the kind of unit document Unit Trust of India used to issue. So you can just have a look at that. This is the kind of document, just a sample unit scheme of 1964 and the Children Gift Growth Fund. This is of 1986. These are the two. Unit Trust of India had 4 phases. The first phase started in 1964 till 1987. It was a slow growth period, and people started investing into the unit schemes of UTI, and less number of schemes were there till 1987. 1987 to 1993 was a changeover period when Unit Trust of India also suffered some losses. But it was expecting the change in the economy, the change in liberalization, privatization, globalization policy of the country, and so on. In 1993, the change of policy by Government of India in the financial sector triggered rapid growth. Till 2003, it grew rapidly, but obviously because of the growth, you would sometimes experience scams, scandals and problems, financial misgovernance. So that phase occurred. By the end of 2003, a major scandal was discovered in UTI. UTI's board was completely reconstituted. A new chairman was deployed if I don't know if you remember his name, it's a very old thing, but he's a very popular financial personality in the country, N. Damodaran. He's a retired IAS officer. At that time, he was in service. He was suddenly moved from PMO, Prime Minister's office, to Unit Trust of India, to head Unit Trust of India as its chairman. And then he reformed Unit Trust of India, and he also gave a very long recommendational report to the government of India for, formation of banks, formation of financial authority, etc., etc. And with this only, with these scams and other things that have happened over a period of time, some of the things like Security Exchange Board of India that got established to, give not only provide financial security to the investors, but also for government to have, an authority in place to look after the securities management in the country. And fourth phase, as I said, in 2003, the board got reconstituted. They had a look at the entire management and structure, the constitution of UTI, and made some recommendations. Those recommendations were implemented, and then UTI Mutual Fund Limited and Specified Undertaking of UTI, SUUTI. These are the two companies that got created under Unit Trust of India. These were the advantages that broadly UTI had. One is that it was a good opportunity for all small investors. They had choices of schemes to invest into. Plus, they had an objective to meet for children's education, for marriage, right? All these things they could invest for their retirement, they could plan safe investments. Obviously, UTI in its initial schemes by 1990 and early 1990, they had schemes which had protection value. That if you invest into this account, you will minimum get, if you invest 1,000 rupees, you will at least get 1,500, right? But if there is a loss or something else, you will get at least 1,500. But if there is a profit, obviously you will get the unit value. So unit value is, say, for example, 10,000, you will get 10,000 for the investment of that kind of safe investment was there. Steady incomes. Why? Because you are investing into shares, debentures of industrial development of the country, corporations of the country. You would continue to draw interests and dividends accordingly. Expert handlings. Obviously, there were advisors in the Unit Trust of India. It was the function of Unit Trust of India to provide expert financial advice. So they had hired experts of financial field. Tax concession, because you are investing into a government entity, private, a public sector entity. The money was directly flowing from Unit Trust of India to the public sector undertakings, private value-based shareholding, etc. So government wanted to give tax concession. And liquidity. Obviously, because of the small savings in the market, as I always said, India is a small saving based country. India has a very good habit of doing small savings, whether it is 500 per month or 5,000 per month. Everybody, every family, every citizen of the country is interested in saving money. And sometimes we go to an extent by saving the money that we develop a habit of having black money as well. What do? That we do not report to the government that we earn. Right? So that kind of habits also develop, which is a bad part of an economy. But still, we have a very strong roots because we save money, whether it is in bank or not. That's immaterial, but we save money. That creates liquidity not only for banks, but for people. Because ultimately, banks are for whom? For people and institutions, to create flow of money from upper end to down end and down end to upper end. That is very, very important. So flow of income, flow of investment, flow of money is ensured only through savings. If you do not have savings in the economy, there is no point of flowing money. As against this, the model of US is different. They were largely dependent on investments only. They said that, why do I save? I am a small person. Government is protecting me. Something happens, government will come in front and it will protect me. So what they used to do, from Monday to Friday, they used to work very hard. They used to earn money and spend it on Saturday and Sunday on a weekend. They used to go out, drink, dance, spend money on clubs, bars, came back empty-handed on Monday, work hard for next 5 days, earn money on Friday, and go and spend it off. And then they started working on credit cards, because obviously every Monday they were left with no money or very less money. So they used to travel, they used to come here and there, they used to buy vegetables, they used to cook food. So what to spend? So they started having credit cards. So this credit card fashion came from West. Why do you need a credit card? Ideally, when you have savings, when you have a salary, why do you want a credit card? You want a credit card because you don't have money. And that's how credit card came into existence. In India, when people lose jobs, they still have some deposit in their hands to spend on. But when Americans, they lose jobs, they directly look at the government that, okay, government will give us some $1,000 or £1,000 as unemployment allowance. But India is not a country where government can give unemployment allowance to 50% of the population. Because if you look at your home, if you look at our homes, our practices, most of us do not work up, by the time we reach intermediate or senior secondary. We don't work. We do not have a culture. So if you ideally see, one person's income is there in the family and everybody else is dependent on it. So say, for example, there are two kids in the family and two elders, parents. So three people are dependent ideally on one. Because women empowerment has happened in this country after 3 or 4 decades. Slowly women started coming up. The main problem was their education. Their education was stopped at a very early stage in the first 3 decades or 4 decades of independence. But in the last 2 decades, girl child also started getting education in every family and they started doing jobs. And that is where dependence on male population reduced slightly. I would say still the dependence is reduced less than 10%. Because a lot of people, they just, in the name of education, they give education until 10th or 12th and they say that we'll marry the girl. That is another misconception in the society. And because of which the dependence is still on males. In urban areas, the awareness is better. Semi-urban areas, it is good, but it is very bad in rural areas until now. So these are some of the examples of Unit Trust of India and how Unit Trust of India functioned and how it provided benefits, etc. So that's how UTI worked. This is a small thing that we did on UTI. Let's have a quick look at IDBI Bank. So IDBI Bank is an Indian government-owned financial service company. Earlier, it was an erstwhile Industrial Development Bank of India, which was earlier headquartered in Mumbai, and it was also created by an Act of Parliament in 1964. The Act of Parliament was Industrial Development Bank of India, Act 1964, and the institution was again a statutory institution created, managed, and owned by central government. Central government held all 100% shares of this company initially. So by the time, we have seen in last few years, the bank grew as one of the largest development banks in the country. As I said, we were discussing in the previous chapters, what are the development banks? National Housing Bank, SIDBI, NABARD. These are the development banks which were created with certain purpose. But we saw rural banks created with the purpose, agricultural banks created with the purpose, small industries bank created with the purpose, but we never saw that if a large kind of a corporation, large industrial development company getting formed, then who will support the finance for that company if they look for loans? So then Industrial Development Bank of India was created under the Act of the Parliament in 1964. So that's how, the entire thing came in. The idea of Industrial Development Bank in India emerged after Second World War. So first the point was that we were discussing last time that after First World War, we had the Great Depression. Countries suffered with almost low or no revenue, with very high expenditure, no employment, poverty, and whatnot. And plus there were natural disasters that caused more agony to the governments in dealing with these problems. So they started thinking to set up national level institutions that can provide finance for large industrial corporations, because without large industrial corporations, you would not be able to handle your small investments, small corporations. So in India also, we had this kind of a system. And when, in 1964, India had a vision to slowly and steadily release core sectors for private investments, it started working on Industrial Development Bank of India, which got created. So we all know that, specific purpose development banks were created in India during that decade. So Industrial Development Bank of India was established in 1976. The ownership was transferred to Government of India completely. Earlier in 1964, this was established under Reserve Bank of India. Then 100% of the shareholding was transferred to Government of India, and IDBI started financing and providing financial assistance for greenfield projects for expansion, modernization, and diversification. Expansion is one that, whatever current industrial organization you have, you want to expand, you want to invest into new fields, and you want to start working in new areas. That was one. Secondly, modernization. 1970s to 1990 was another era in which technology was changing and changing rapidly in the West. And whenever you want to invest into technology, you need heavy funds, huge funds, and financial assistance. Alone, a company cannot do that. Either it needs investment or it needs financial assistance. Right? So owners at that time in India, entrepreneurs were not there. That much entrepreneurship was not there. Funding was not there. So government decided to give IDBI a chance to modernize organizations with technology and other machinery related financial assistance. Diversification is that you are working in one industry. The large industrial corporation was working in one industry and they wanted to move into another industry. Apart from retaining the current profile, they were working in new industries. So when I said expansion is just, you are currently producing 1,000 units a month. You want to, produce 5,000 units, right? That is expansion. You were producing 1,000 units. Now you want to produce additional characters of the product with another 1,000 units. That is what is expansion. But when you say diversification, currently, for example, you are into the cement industry of construction. Now you want to, buy some bricklins and you want to move into the brick industry as well. You want to move into steel as well. You want to move into iron ore or maybe mining, or maybe, picking up the raw iron ore and, converting into the sheets, that kind of business. This is what is diversification. So Industrial Development Bank of India was mandated with providing financial assistance for these three different purposes. So, and then, in 1991, we all know financial sector reforms were unveiled and government rolled out a number of schemes. So IDBI provided indirect financial assistance by way of refinancing the loans. So whatever loans were extended by state level financial institutions and banks of public sector undertakings, those loans were, they were becoming bad loans. The companies were not able to return, or people were not able to return those loans. So basically they were restructured. They were refinanced. That, okay, fine, we'll reduce the interest. Last time you took, 100 crores loan, we'll give you another 50 crores. And then, both the loans will be clubbed with low interest rate and low EMIs, and then you can return that money. So, financial stress on individuals and companies, because before 1991, there was huge financial stress on Indian industry, including exports and imports. So there were companies, export agencies, import companies, importing agencies, which were struggling with huge financial debt. So their debts were restructured, their debts were replanned with the help of Industrial Development Bank of India. So IDBI as an institution in July 1995, central government decided to reduce its shareholding from 100 to 75. What did it do? It sold off its 25% shares in the open market, which is also called an IPO. It made a public IPO in 1995 to reduce its shareholding from 100 to 75. And for the first time, Industrial Development Bank of India had private investors, public investors, up to 25%. Right? And with the help of IDBI Bank, Industrial Development Bank of India, institutions at the national level like Securities and Exchange Board, National Stock Exchange, National Securities and Depository Limited, Stock Holding Corporation of India, all these institutions were created under the guidance, management and funding of Industrial Development Bank of India. These companies were also created, which have a national importance of role. They were also owned by Government of India, but these companies were created. Exim Bank, Small Industries Development Bank, IDBI, these were created, and Entrepreneurship Development Institute of India. Why? Because if you want to have rapid industrial growth in the country, you want to have maximum global footprint of manufacturing in the country, service sector in the country, you need to have entrepreneurs. How long you want to go to the global world and tell them that, we are ready for investment, come and invest, because you have competitors like China as a large country, and countries like Philippines and Malaysia, which are small countries, but they're still competitors to India in service sectors. And obviously the supremacy of China in terms of manufacturing, we are still not able to challenge that. But if you start having entrepreneurs, why India had people coming from outside the world? Why foreign banks wanted to invest in India? Because India has its own history of banking. India has its own success stories of public sector banks and private banks like HDFC and ICICI. That is the reason HSBC Bank came to India and stayed here for a long time. Citibank, it's a US bank, it came to India and stayed here. And they had Indian accounts, and they had things, they had profitable business in India. So that is the reason why Industrial Development Bank of India created entrepreneurship development programs. A lot of entrepreneurs from outside India got attracted because entrepreneurs like Tata, Ambani, Adani, these people were given that kind of environment, atmosphere to develop India industry. And they got successful, they became global entrepreneurs as well. And that is where foreign entrepreneurs and foreign origin companies got the confidence that they can invest in India. So obviously you should have your own entrepreneurs who can do something better, who can have better ideas, who can mobilize funds, like for example, Flipkart, Ola. Though the money must have come from other funding agencies outside India, but the idea was developed by the Indian entrepreneur. Oyo Rooms, for example, all these organizations were set up by Indian entrepreneurs. So you should have entrepreneurs in India. So that was the reason why Industrial Development Bank was a successful bank. Slowly, Industrial Development Bank produced bad results, some bad loans, some bad financial governance, and that resulted in formation of a committee by RBI, which actually recommended that IDBI, Industrial Development Bank of India, should diversify its activities in terms of financing and banking. And they should get away from the conventional problem of that they were not a commercial bank. Industrial Development Bank of India was not a commercial bank. It was a development bank by nature. So they said that you continue your development activities, but start doing commercial banking as well. Right? So what happened? Through the financial sector reforms in the year 2003, the amendment was picked up in the Industrial Development Bank of India Act 1964. The amendment was Industrial Development Bank Transfer of Undertaking and Repeal Act 2003, which means Industrial Development Bank of India Act 1964 was repealed, right? It repealed is basically a word used for conversion of that act into a different act. And IDBI attained the status of a limited company called IDBI Limited at that time. Subsequently, in September 2004, the Reserve Bank of India incorporated IDBI as a scheduled bank under RBI Act 1934. I've told you that there are two categories under RBI Act 1934: scheduled banks, which have more than 5 crores of capital, and non-scheduled banks, which are less than 5 crores of capital. So it was having more than 5 crores of capital. So RBI included and incorporated IDBI as a bank, as a commercial bank, scheduled commercial bank in the list of scheduled banks. And then formally it entered into the banking business from 1st October 2004, and the commercial banking arm of IDBI Limited is called IDBI Bank. And then IDBI Bank was merged with IDBI in 2005. 2004, IDBI was created, IDBI Limited, and IDBI Limited had a company called IDBI Bank, which was a commercial segment, commercial banking segment. IDBI Limited was a development banking segment. Both got merged in 2005 to create a new entity called IDBI Bank. And then in 2006, in the process of further strengthening of capital, IDBI acquired United Western Bank, which was headquartered in Satara in Maharashtra, in a rescue bid. So basically, United Western Bank lost all its capital. It was completely dried up in terms of liquidity. It had no capital left to return to, the shareholders and, the customers of the bank. As part of rescue, United Western Bank was taken over by IDBI Bank, and then, IDBI Bank doubled its branches from 195 to 425. Maximum presence of United Western Bank was in Maharashtra and Gujarat. So you would see maximum number of IDBI branches in Maharashtra and Gujarat as a concentration of branches. Right? Even this United UWB that I'm talking about, that was very popular in the rural areas also. So that is how that took over. And then, IDBI Bank started, diluting its assets from central government, and now central government owns only 52%, 52.67% of the total shareholding of IDBI Bank Limited. And I think they have an aim in next 2 years to bring it down to 40%. The government of India would like to go public once again to sell off 12% of its shareholdings in IDBI Bank to make its profile more lucrative, profitable, and all. And for the last 10 years, from 2009-10 to 2019-20, IDBI Bank ran in losses because of non-performing assets, loans that were given to large corporations which could not be paid off, and ultimately, those became the losses for the bank. But last year in 2020-2021, they made huge profits of more than 1,000 crores, which was the first profit year after 2008-2009. So they suffered losses for 10 years in a row. So that happened. So this is what the journey of IDBI Bank is. Just wanted to share that one with you because these are the changes that have happened over a period of time. Now let's quickly, okay, so we have already seen this. Last portion of this unit that I would like to cover is Basel. We talked about Basel. Let me tell you what that is. So basically, Bank for International Settlements, BIS, is something that was established on 17th May 1930. It is the oldest international financial organization with its head office in Basel, Switzerland. Basel is actually a place. So the framework is named after Basel. Why? Because Bank for International Settlements is the base behind having this Basel framework. BIS, what does it do? It fosters a cooperation among central banks globally and other agencies in pursuit of monetary and financial stability. So nowadays, when you are into a liberalized and globalized economy where money is flowing from one country to another, maybe it is flowing from one village of a country to another village of the country. Say, for example, your relatives are in US, in some part of US suburban area. They are transferring money from there to India to their parents and to their bank account, some HDFC or Axis Bank account or State Bank of India. That is where there is a need for central banking organizations like RBI, Bank of England, UB to have a good cooperation for financial and monetary control and stability. So what BIS, Bank for International Settlements, do? A forum. It provides a forum to promote discussion and policy analysis among central banks and within international financial community like International Monetary Fund, World Bank, and Asian Development Bank. A center for economic and monetary research. That actually money is flowing from where? Where do you need more money? Where do you need more credit? Where do you need more income? Where do you need more investment? Where are more small savings? How we can mobilize those savings from one part of the globe to another part of the globe. Because World Bank is what? World Bank is a bank that provides loans and credit and other kind of services, including deposits, to premier banking and government institutions. So even Government of India has deposits in World Bank and it has taken loans from World Bank. So how does World Bank would work? It cannot work in silos. It cannot work in isolation. It has to work in conjunction with the central banking units across the globe, global banks, monetary authorities, financial experts across globe who advise against price rise, inflation of prices, inflation, deflation, recession, depression, economists. All these people, they came together to form a forum called Bank for International Settlements. Right? A prime counterparty for central banks for their financial transactions. Obviously, there are international transactions that are happening which are managed and monitored by central banking authorities. They are directly involved into it. So how to have a common path to cross each other in terms of transactions? It was BIS. Agent or trustee in connection with international financial operations. Obviously, because when you do international transactions, obviously you would have to have an agent in between. For example, I will just give you one example, very interesting one. I had to do one international transaction. I think a couple of transactions that I did when I had to transfer money from my HDFC Bank in Delhi to Barclays Bank in Botswana. Botswana is an African country. It's a small African country near South Africa. And what's the other? Mozambique. All right. So I had to do the transaction. So obviously, HDFC Bank will not be able to transfer the money directly to Barclays Bank Botswana. That is for sure. Some agency will sit in between, which will take money from HDFC Bank and will transfer that money to Barclays Bank Botswana. Though on virtual systems, the money will directly go to Barclays Bank Botswana. That's a very interesting thing. So what they do, I forgot, like an IFSC number in India, there is a SWIFT number which is available globally. SWIFT number, SWIFT. So that SWIFT number provides the contact for that agent. SWIFT number is the agent's number, kind of. I'm just making you understand how the framework works. So the moment you put in the SWIFT number for Barclays Bank Botswana, it tells you who is the agent. The money flows to that agent, and that agent transfers the money to Barclays Bank Botswana. And the agent promises you that money is already transferred. It may physically take 1 or 2 days, but when you see from your eyes, you find that your transaction has been completed. So when you have these houses, agent houses, trustee houses, they have to be monitored, managed, controlled, regulated by the central banking corporations of India and Botswana. So they will have to have some relationship with these. And if there is a problem, there is a dispute, you can go to BIS to contest that dispute. BIS will be able to provide you that forum to discuss what's the problem, what happened, why the payment could not be made, why payment failed, why more charges were there, etc., etc. So this is what the Basel framework is all about. Every 2 months, BIS hosts in Basel, Switzerland, meetings of governors and senior officials of the members of central bank. So Basel, as per the framework, they hold a meeting every 2 months for the senior officials of central banking institutions across the globe. The meetings would provide an opportunity for participants to discuss world economy, financial markets, exchange, and views on topical issues of central bank interest or concern. Right? BIS also organizes frequent meetings of experts on monetary and financial stability across the globe, or with a specific idea of specific countries. For example, I think 5 years back or 6 years back, we saw that there was a financial crisis in Greece. Greece was almost bankrupt. It had less assets than the expenditure. So it was not able to pay its loans back. Exactly the situation that India had in 1991, when India suddenly unveiled the financial reforms and saved itself from that situation. But Greece reached to that stage. And who helped Greece? The European Union, particularly Germany, helped Greece by giving additional grants. Technical issues such as legal matters, reserve management, IT systems, internal audit, technical cooperation, etc., etc. Nowadays, the most important thing is cyber attacks. Cryptocurrency. Cryptocurrency is one of the most debated topics across the globe. and BIS is also discussing what is cryptocurrency, how do we invest into cryptocurrency, what are the secured features of cryptocurrency, what are the cyber attacks that can blow the entire money off. BIS also hub for sharing statistical information among central banks. It publishes statistics on global banking, securities, foreign exchange, and derivative markets. So this is what is Basel framework is all about. So BIS is the institution which is sitting in Basel since 1930, and it is providing an opportunity for global financial organizations, particularly central banks, its officials, global financial experts, right? World banking institutions like World Bank, ADB, IMF, to come, sit, discuss, analyze, formulate policies, help each other, provide statistics, provide trends, create forecast what is going to happen in the banking industry, in the financial industry, and so on. So you have an international level cooperative organization which is helping you, helping your country as well in the global liberalized economy. Fine. So this is where we finish off our unit 1 today. And now I will ask if there are any questions from your side. Please go.